Here on the Transparent FX Academy, every day I give you my best market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the forex market. So without further ado, let's jump straight to the charts and see which is today's forex pair. In today's video, I want to speak about US oil. Now, why do I want to speak about US oil? Because at the moment we do have quite interesting price action on it. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames and then going down on the lower ones. And I will be keeping the analysis as educational as possible. We will also check what we have from a COT perspective, so commitment of traders, which is basically what the non-commercials in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on US oil. Now, starting from the monthly time frame, what we have is a market which at the moment is testing an extremely strong monthly supply area. In fact, what we can see here is that exactly from here, the market had started all this move to the downside, confirming that zone as extremely strong supply. And at the moment we are testing this exact same supply, and we definitely expect the market from here to start a rejection to the downside. And in fact, we can see how the market has actually already started the rejection, and we can expect more continuation to the downside. Going down on the weekly time frame, what do we see? Now, here on the weekly time frame, we can see how the market has just created this candle here. Now, when you see the creation of a candle like this with a very long wick and a red body, you usually expect the next candle to fill in the wick, possibly for the creation of a continuation to the downside. And in this case, we would like to see the market provide a move all the way down, even to retest this previous weekly resistance, again resistance here, which now that the market has broken it to the upside is turned support here. So monthly and weekly both indicate for a potential continuation to the downside, and in fact we can see how the market has already started it. Just a quick thing, make sure that you leave a like and subscribe to the channel, and also let me know in the comments the topic for the next video that you will like. Going down on the daily time frame, what do we see? Now, here in the daily time frame, we can see how the market at the moment is providing exactly the move that we wanted to see from our previous analysis. In fact, when the market was around this area, I made a full breakdown of US oil, explaining all the reasons for which we wanted to see this market provide first this move to the downside, correction, and continuation to the downside, basically for the creation of this head and shoulders. And in fact, that is exactly what the market has now been creating. And by the way, I will link this previous analysis in the description so you can go and check it out for further reference and more free education. Now here in the daily, however, we can see how in creating this move to the downside, the market is also printing this M pattern. And in general, after the creation of an M pattern, you want to see the market complete the pattern at the neckline, which is the previous support to resistance, before then seeing the continuation to the downside. So here in the daily, everything seems quite bearish, and we do expect the market to go for a retest of this previous support and resistance before then seeing a continuation to the downside. Now here in the daily, we can also notice how the market is currently below the neckline, obviously because it has created this M pattern. And by definition, the neckline is previous support turn resistance. So what we can expect at this point is definitely also from a pattern perspective and structure perspective to see the market go and retest this area before potentially providing a continuation to the downside. So basically, if the market will provide a correction to this zone, inside of here, there is definitely the possibility to be looking for a potential shorting opportunity back down to the structure that we have already identified on the monthly and weekly timeframes. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds, so the non-commercials in the market, are doing. If we check the COT data for the CAD, which correlates with US oil, we can see how lately net positions have been dropping. In fact, we went from having 48K net positions down to having 41K net positions, with more shorts than longs getting added. We do see in the long term net positions increasing from 2.4K to 41K, and overall there is definitely the possibility to see the market provide this continuation to the downside. So how we will be approaching this potential shorting opportunity on US oil with students. Now, if and only if the market will actually provide a correction back to this previous support term resistance, then this is the area inside of which we are interested in a potential setup. And the way in which we will be approaching it is as usual being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. But when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday time frames. So with students inside of here, we will be monitoring price action from a 4-hour perspective and lower, waiting for the market to shift from a 4-hour bullish market as we will have to a 4-hour bearish market. And as soon as the market will shift from an intraday bullish to an intraday bearish market, at that point, we will be adding US oil to our watch list. And as soon as the market will provide to us one of our valid entries with students, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside, and for the market to complete this impulse correction and impulse pattern to the downside, and for the market to provide and create a lower low. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. Every day you get the new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you can also ask questions and get the answer the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.